Welcome traders. In this video what we're going to do is we're going to go over the four-step process that is necessary to take a trade and look at how that process came together in a series of trades from about 2 hours ago today on Thursday, January 3rd. Before we start, I want to point your attention, however, to a new web page that I created, and you get there from the support tab and then the getting started link. On the getting started link, what I've done is I've created a page where I've put all of the YouTube videos about understanding the patterns and understanding the risk from those patterns on one page. And the purpose of that is to get you to understand the hardest part about ZoneTrader Pro, and that is understanding the patterns. When you understand the patterns, you understand what is coming next. And when you understand what is coming next, that is what makes you a better trader in using this system. You're not just sitting there waiting for a signal to pop up. You know that because price does X, Y is the location of your next trade. Okay, now let's look at the charts that we're going to be using in the order that we're going to be using them. And what we are going to look at first is the 500 tick chart. On the 500 tick chart, I've marked that 3 trades represented perfect setups and a 4th trade that had a slightly higher risk. So let's look at these 4 trades in the order that they occurred. The first is a tick divergence trade. And in a tick divergence trade, we trade to a blue counter trend zone, but the $ tick is less. So as you see here, the 515 on the previous high is more than the 385 on the higher high, giving us the tick divergence pattern. As we trade down to here, we trade into an exhaustion tick divergence trade. An exhaustion trade occurs when anytime that we have a reversal from minor, which is occurring right here. So because of that reversal from minor, when we go to test a low or trade below it, we have an exhaustion pattern. And at the same time, that exhaustion pattern was also tick divergent. Now, when we have an exhaustion pattern, the next thing that's going to happen is we would have a trend trade here. However, the software by design does not show that trend trade. That's why it's important that you know and understand the patterns, because when this trend trade fails, that's what sets us up for the reversal trade here. The definition of a reversal trade is a trend trade that fails and returns to the intermediate zone, in this case an intermediate zone of support. The next trade that we're going to look at is again an exhaustion trade here at the top, and with that exhaustion trade again we reversed from minor support here, traded higher, and we were also tick divergent. However, the tick divergence signal was not close enough to the blue zone to be indicating on this chart. But if you notice, the previous high tick was a 944 and this one was a 696. So of these 4 patterns, we're going to look at now anything that would have kept us out of the trade and look for anything that is high risk. To do that, we go to the 150 tick chart. And on the 150 tick chart, you see that we were in the same tick divergence pattern, which presented no high risk. At the tick divergence exhaustion trade, you see that we traded through the blue counter trend zone and down to the strong trend support zone, which is this pink area right here. Just by price trading to the pink support zone, that is the definition of a strong trend. However, immediately after that, we trade through the trend trade and through that, thus telling us that we were in fact not in a strong trend. If we were to take a trade from here, we would be taking the trade with the knowledge that if we weren't a strong trend, this would have been the area where we would have been getting into the trade, and this would have been the area that if the market had been in a strong bearish trend, that we would have seen the bearish trend resume. So if you were to take a trade from here and give it 4 or 5 ticks of risk, you would know immediately either that you are going to get stopped out or we were not in that strong trend. Either way, the risk is going to be the same as it would be for a trade that was not in a strong trend, but you're taking a risk because you're somewhat fighting the pattern of a strong trend. The next thing we look at is this exhaustion tick divergence pattern here. And again, nothing to be concerned with. It's simply a test of this low. And this is a test of this previous low back here. We can see on the cumulative delta, which is filtered for large contract traders, that the cumulative delta is also higher here. The last pattern that we're going to look at here is where we would be selling and reversing, and that was a counter trend trade. Originally it was tick divergent, became non-tick divergent, and we see that in this red label here. But that does not produce any additional risk that would keep us out of a trade. The next thing we want to look at is the order flow chart. On the order flow chart where the tick divergence pattern was, we see that we had an exhaustion signal plus a ZTP order flow signal. And those are two of the most powerful signals that we're going to have. Down here at the tick divergence exhaustion trade, again, we had that same combination of patterns, a ZTP order flow and an exhaustion. And we can also see that we had delta strength buying down here. The following bar, we had extension zones being created along with a POC absorption, a ZTP order flow, and an exhaustion pattern. Now I do want to point something out in that those of you with a very good eye probably saw that on the 5 range chart we had a ZTP order flow, trapped seller, POC absorption, extension, along with a delta strength buy signal all coming in on one bar before the eventual low. So the question would be, why would you not take it from that area? And it's a very good question because in reality you probably would take it. At that point, the 150 tick chart didn't present any risk to us. The only thing that's presenting a risk is the intermediate support zone right here was blown through, and we see that we immediately had a lower low being made. What is somewhat normal of a test of a low is that we test the low into a support zone and we bounce from there. In this case, we traded through it and then bounced, but immediately started trading down after that. However, it would meet all of the criteria at that point for a trade. At the area of the reversal trade, it actually came down and touched the price twice, and it was also touching the price where in the history of those prices there had been previous strong support. We see that we had a ZTP order flow with a large contract buyer along with an exhaustion buy signal on each of those two trades. And then we see that we had an exhaustion signal at a previous known area of resistance where the exhaustion trade took place from. The last thing we want to look at is the point and figure chart, and what we are looking for is a divergence on those point and figure charts where we have an up bar with a negative delta strength coming in. So we see that we had a sell signal at the tick divergence trade. We had buy signals at both the tick divergence exhaustion and at the reversal signal. And then we see that we had again a very strong number for the exhaustion trade at the high. So when we put that all together, we're looking at a tick divergence trade that gave us about 10 points to the sell side. It then gave us about 13 points to the upside, and then the market traded down over 25 points to a low of 24.54 from that exhaustion trade that marked the high. So in a period of about an hour and a half, that led to a significant amount of profit when all of the requirements of the ZoneTrader Pro setup were met. I hope you've enjoyed this short video on what it takes to put everything together to develop a winning trading system. And if you have any questions, be sure to give me a call. Thanks and have a good day.